Hi, everyone. Good afternoon, and welcome to today's webinar with the Securities and Exchange Commission's Office of the Advocate for Small Business Capital Formation. My name is Alexis D'Amato, and I'm the Government Affairs Director here at Small Business Majority. As you all know, access to capital remains a substantial barrier for small businesses nationwide. Whether that be within the startup or expansion phase, the ability to secure safe, reliable capital is paramount to achieving sustainable growth and innovation for your small business. Despite the vast array of issues that we advocate for at Small Business Majority, capital continues to be a chief concern for all of the small businesses that we interact with, both in and outside of our network. This is no surprise to us, considering that small businesses have weathered some pretty drastic challenges over the last few years, including the COVID-19 pandemic, increasing prices, supply chain challenges, and a lot more. Challenges in accessing capital carries across party and demographic lines. However, we found that minority entrepreneurs often face disproportionate systemic barriers to accessing capital. Our pandemic-era research found that while 19% of small business owners overall have obtained less financing than they sought, the ability to access capital was even smaller among those minority-owned businesses. To close this gap and many others in capital access for America's smallest job creators, federal and state governments offer a suite of financing tools and educational resources to help you get started on your journey. This is why we're really thrilled to be joined today by TJ Collins and Jenny Regal from the SEC's Office of the Advocate for Small Business Capital Formation to learn all about the SEC's educational resources that can help you access the capital you need to grow and thrive. To introduce our speakers before they get started, Jenny Regal serves as the Deputy Director of Policy, and TJ Collins serves as the attorney within the office. TJ and Jenny focus their work on making sure that small businesses like you have the tools needed to gain access to the capital markets that you need to scale. Thank you, TJ and Jenny, for joining us today. We're really excited to hear all about the resources that you offer. I know I've gotten a lot of questions about this in the last couple of days since we've announced this event, so we're really excited. But before I turn it over, please stay tuned for the end of this webinar where my colleague Connor will moderate and help answer questions from our audience on all things capital formation. Be sure to use the Q&A function of this webinar, and we'll make sure that we do our best to get to your question. With that, I'll turn it over to you, TJ.
Awesome. Thanks, Alexis, and good afternoon, everybody. We really appreciate you having us. Before we get started today, I just need to give our quick SEC disclaimer that the views Jenny and I expressed today are in our official capacity as staff of the SEC Small Business Advocacy Office, and they don't necessarily reflect those of the Commission, any commissioners, or any of our colleagues on the staff. So to jump in, today we're going to try to cover 5 areas. First, we're going to give you some background on our office in general. We'll then transition to some detailed data and information on how companies and especially small businesses raise capital and navigate the regulatory pathways. And then we'll turn to the highlight of today's call where we walk through some of our educational resources and the question and answer portion that Alexis mentioned. So jumping into the background about our office. So as kind of implied, we are a advocacy office within the SEC, and the SEC is a federal agency that you're probably aware of that has a 3-part mission to protect investors, maintain orderly and fair markets, and facilitate capital formation. What's cool about our office and why we're here today is because we try to follow that mission with a special focus on small businesses and their investors. So the way that we do that is, as you can see in our mission statement, is championing businesses that you all run, small business entrepreneurs and founders, so that we can empower you all to build great companies. And throughout this call, when we reference small businesses, we are talking about a very wide scope. So we'll include everything from a very small startup all the way to a smaller registered public company that has up to a $250 million market cap. And what's even cooler about our office is we have a special focus on the unique challenges that Alexis mentioned for diverse founders, women founders, and also businesses that are located in rural and natural disaster areas. And so the way that we kind of go through our mission and cover those different areas, we focus on 3 main kind of work priorities. The first one is what we're doing today, trying to engage with small business owners like yourselves, hear the questions you have, get our resources out to you so that hopefully you can navigate the capital regulatory pathways easier and know that there's someone advocating on your behalf. That goes straight into our helping bucket, where our educational resources are really a priority. We try to break down the federal securities laws into a more digestible manner so you can cut through the legalese and understand what they're getting at so you can utilize them. And then the last piece is analyzing all the different data. Alexis mentioned a lot of the data that they've seen, and we also go through a lot of different small business data, capital raising data, so we can see where the needs are. And that's where we're going to turn to first. First is some data that we think you all may find some interest in. And before I start in this data, just to give a little shout out, each year we do what's called our annual report. So if you like this data, want to read more about it or explore it more, we'll put some links to that annual report in there so you can see where it's all coming from and find out some more about that. So the first data point that we like to highlight is where capital is coming from for small businesses. And what we like to point out is the source that is maybe over assumed that people go after is external financing, when in reality, less than half the people that need to get outside capital will turn to external capital, with only 8% of that being equity financing. So if you found yourself not needing to rely or not even considering external financing yet, that is in the norm. Most of our data shows that people rely on personal funds and cash, which we consider internal sources of financing. But the data that we'll go through next will show that a lot of those internal sources of capital, different types of founders have different starting points for that and different success with the external financing. And so that's why we try to make it very important as our educational source to make external financing accessible to everyone. So looking at internal sources of capital first, we see that the inequalities across demographic groups definitely impact the starting line for where the wealth gap exists in America. Here you'll see that African American and Hispanic founders, they face additional barriers just because their starting line is a lot different than the white entrepreneurs and founders. So that different starting line for internal capital can affect how your small business grows from the beginning. Next, when we look at external sources of capital, those barriers we see still exist. This data here shows that diverse founders are less likely to receive the debt financing that they seek compared to all the other ethnicities. So when you have barriers with both internal and external capital, that can lead to founders looking for more external equity investors. But our data kind of continues to go where we see some barriers also with that. So external investors, when you're considering external investors, it's always important to still note that there's still a very challenging area, especially for women and diverse entrepreneurs. This information right here shows that women only receive a small portion of total VC funding, and then an even smaller portion of that goes to women of color. And some data that we don't have on this slide is that only 1.5% of the VC funding went to Hispanic founders and 1.1 go to Black founders. So as we mentioned, part of our special focus is also on rural and natural disaster areas. And we see that the barriers also exist in that area. And when we talk about rural, you can think of areas outside of the coastal and the major city hubs. And so what this data shows is that only a small portion of capital raised throughout the nation goes to supporting those rural businesses. And what we show even more in detail in our annual report is how much small businesses in rural areas lift up those economies. So it's something that we try to focus on since it helps those economies so much. And as you can see with this data, the reason we take such a priority and focus on it is because we want to be able to reduce those barriers in line with our special focus through our advocacy efforts and our educational resources so that you can have hopefully better success going through the regulatory pathways. And that's what I will turn to next, is how to navigate these regulatory pathways. This will delve in a little bit into the legalese of the capital formation exemptions, but you don't have to worry. We're not going to go too much in the weeds on that. If you have any questions, though, about these regulatory pathways, you can definitely throw them in the chat or reach out to us individually by email, which we'll put our specific email address in the chat later on. So a little reminder from early on, the SEC regulates the offer and sale of all securities. It doesn't necessarily matter how big you are, how small you are, if you're a public or a private company, or who you're selling your securities to. What you need to remember is that any offer and sale of security either has to be registered with SEC, or conducted under an exemption. And when we talk about exemptions, we're talking about what you see on the right-hand side of the slide, the exempt offering pathways. What you see there in those is probably what you may have heard of, talked about, or you may have utilized yourself with a Reg crowdfunding, referred to as like Reg CF, Reg A, or a Reg D offering, which you see with the 506s. And like I said, the side on the right is where we focus a lot of our educational resources. And when you're considering those pathways, we'd like to help people, or kind of, you can get confused where you want to focus. So we always encourage people to have a plan. Think about the amount that you need to raise, how you're going to connect with people to raise that money, who you could potentially raise it from, and where you're located. And we try to package that plan and those questions into our interactive resources so that it doesn't become so much a burden, since there's a lot that goes into wanting to jump in and raise capital from external investors. And so now I will actually turn to our educational resources. I'll show you those on our actual website to jump off of sharing my screen. All right, so when you think about our advocacy efforts and wanting to raise capital, we always want to highlight our resource page. And this is the landing page, which you see now on your screen, of all of our different resources. We have resources from a glossary of terms that put a lot of the different verbiage that you'll hear in the legal landscape in more detail, and break it down into how it can be easily understood. We also have information that goes into even more detail, what we call building blocks, and I'm going to highlight a few of those shortly. We have videos that go through different rule makings and context principles, and then we even have compliance guides that can go even into more detail on how you can comply with, say a Reg D offering or a Reg A offering. So highlighting the first kind of resource that's really popular for us is the glossary. And this is something I still use all the time as an attorney on our team. So it's something we're very proud of, and we hope helps you all out. It's just a laundry list of securities regulatory terms. It's like, obviously like a dictionary, you can search a term, but what's neat, under each term, you can find out more information about what you're looking at. So that's where we have our building blocks really come into view. Let's see if I can get to those. And so our building blocks, like I mentioned, when you think of a topic or maybe a question you've been asked by potential investors or you've asked yourself, we've tried to take the most common questions that we hear and build resources around those. So we have questions and building blocks for very early stage companies, all the way to when you're in the middle of capital raising, to even when you're a later stage company thinking about potentially going public. Two of the ones we hear from a lot about for small businesses are, when am I ready to take capital from investors? And so when you click that, we've created, in line with a federal agency, a unique acronym, and it's called CAPITAL. And so you can, access this on our site and read some more information about each one of these principles. But what we like to highlight is, the C stands for your financial disclosures. Make sure your, financial table and cap tables are in order. A, think about the amount of money that you want to raise, so you can have a plan for that, where the P comes in. Investors are going to want to potentially hear how you'll put that money to use. And then when you're talking to those investors, that's where the I comes in. You want to focus on investors that will be interested in your company and the stage of raising that you're in. And then the T coordinates with knowing and being aware of how much time raising capital consists of meeting with investors, going through the pitch materials, and then A, lining up those advisors and attorneys if needed to help you out with that process. And then the L is where you have that long-term vision that you can talk about in your pitch materials. So that's one of our popular building blocks. Another one that we have a lot of success with is knowing the differences or understanding the differences between all the different types of investors that you may run into through your capital raising pathways. So the first one in the early stage, you'll hear of friends and family rounds. That is, usually at the very early stage, those will be the people that will come in your pre-seed stages and probably have a smaller size portion. Next, when you're considering, more external investors, that's where angel investors you'll obviously hear about come in. They usually can happen in any life cycle stage of the company, and their level of interaction involvement can vary. You can have some strategic angel investors who could be very supportive, and their amount that they could contribute could vary a lot too. And then the last one that you've definitely probably heard about is venture capital funds. Those are usually groups of investors that will come in. They could come in any stage, but maybe towards the later stage a little bit more often. And they can, probably raise a lot more or offer a lot more of the money since they're a group of investors. And so those are two of our building blocks. And again, a lot of this, we'll share the slides after the call, and links to these different pages and all of our resources will be available to you. The other fun tool that we have that goes with that last slide I showed about planning accordingly with how to raise capital or understanding your goals is the Navigating Your Options interactive tool. So this is a tool that will take questions that may seem very, legally based into something that's you can just click and answer in an interactive setting. So there's 7 questions, and I'll actually put Jenny on the spot and I'll ask her these questions like she is a small business entrepreneur, and we'll go through them together and we'll see what answers that we pop up with.
Excellent. So I'm going to say my business does, well, you know what? I'm going to say it does not exist. I want to see what you have to say.
Nice. So if you hit no, it will take you to new options that you can start on how to start a business. So you'll see here, you have a lot of SBA resources that I know that you all may be familiar with, and even take you to some state sites on how to form and find a business.
Excellent.
And if we went with yes, that's where it'll kind of continue us along with the navigation pathway. So we'll go ahead and select yes for that one. And this one's focused on, have you explored your different options to raise capital? So that's if you've decided that I want to do a Reg D offering or I want to do a Reg A offering. So Jenny, have you decided yet, or?
You know what? I want to say not yet. I want to see what you have to say.
Nice. So if you said not yet, then this will get to the point where you can, I did that and see if that went to the, yep, that went to the right one. So this will push you to maybe considering less dilutive sources of capital, different grant programs, different federal funding programs, where you can take advantage of more resources than just raising external capital from investors through equity or a debt offering. And so if you have, if we had said yes to that one, we can jump down that path if we'd like.
Excellent. So go for yes.
Yep. Yep. And so this one is, have you determined the pathway that you want to raise it? And so that's what I was referring to in that last question, if you knew exactly which exemption that you wanted to take.
For here, I'm going to say not yet. So a lot of people they don't know, right? They may not think about what pathway they want to go. This is for someone who I know I want to do a crowdfunding offering. And then you would check yes, and there's a way to quickly get you to our crowdfunding resources. But for now, let's do not yet.
Awesome. Perfect. So then that kicks us to the how much money do you want to raise? So that's part of, as we mentioned in our capital acronym, the amount that you're looking to raise, so you have enough runway to keep growing your business. So Jenny, how much are you thinking for your startup?
Let's do less than $1 million.
Okay, less than $1 million. All right, so after you have that, it jumps to the questions about potential investors and a term that we kind of consider like general solicitation. Are you going to just use your network? Are you going to want to advertise somehow through online, or are you open to either or?
You know what? I'm not sure how I'm going to raise capital. And that's why I'm here. I'm here to get more information and to learn. So I'm gonna have you choose other or unknown.
Perfect. So we'll select that one. Okay, then one of our final questions is, where do you think your investors are going to be located? So you can do intrastate. So think about if you lived in Virginia, you're going to raise capital just from Virginia residents. And the reason we ask that question is because different offerings can give you benefits. If it's an intrastate only offering, there may be some state regulations that you can take advantage of. Or if you want a broader pool of investors, you can do out of state.
You know what? I'm going to go similar theme here that I'm not quite sure, right? I don't want to limit my options to just one particular state, especially, I'm here in DC, which we're a very small state territory. So I'm gonna choose out of state or undecided.
We'll go with that one. And then lastly, are all of your investors accredited? So accredited investors is a term you can definitely find about in our glossary, in our building blocks. And that's more of what you can consider your higher net worth individuals, or if they meet certain educational tests. And so that is a way to potentially limit your investor pool or expand it depending on the way you look at it. And so, Jenny, do you think all of your investors will be accredited or potentially not? Do you want to open it up to unaccredited investors? So,
I'm not sure. And so I'm going to just say no.
got it. We'll go with no. Perfect. So this is where our Navigator tool really shines. It will give you the results of the different offerings that it thinks that you could work with the best. This one are these results. It highlights kind of the top three: a 504 offering, regulation crowdfunding, or a Reg A, which we is referred to as a mini IPO. And then it'll kind of also, in different settings, depending on how you answer, can give you some different backup pathways that you can explore just to learn more about those. So Jenny, is there one that you want to learn more about or explore just to see where it takes us? Any of those jumping out to you?
I think most people probably heard of regulation crowdfunding. So I would say let's do regulation crowdfunding. And this may not be what you all have heard of based on, there's different types of crowdfunding. This goes to securities-based crowdfunding. So not like my uncle broke his leg and he needs help to pay for it, and I'm making a donation to a very good cause, but that's not a security, right? Let me turn it back to TJ.
Yeah. So this is when you click that red crowdfunding link, it takes you to, I guess, keep hitting back on more and more of our detailed resources. On our page, you can start at the very high level and dig as deep as you'd like. So this takes us to our regulation crowdfunding page. It will explain some of the terms, like we mentioned, what's an accredited investor, and then give you a brief synopsis of reg crowdfunding, which you can see here. And that's what we hope that you will find with when you use our Navigator tool. You can kind of ask your questions yourself without having to know all the different regulatory exemptions and pathways that you could take advantage of. And then as you answer those questions, get exposure to know which pathways may suit you best and learn more about those so you can make choices that help your small business. So we'll turn back to the slides here, but I think again, what you're seeing here, those are the slides that you will have access to. But now, since we're done with the educational part, we can jump to the Q&A for everybody.
Awesome. Well, thanks so much, TJ and Jenny, for that really informative presentation. I wanted to, before I turn it over to my colleague Connor for moderation of the audience Q&A, I had one question that I really wanted to highlight from the chat. So this is regarding the CAPITAL acronym and the steps that you need to put together a good pitch. Does the SEC team have somebody that would help small business owners follow along that formula and create their own pitch deck? Or is this something that you may recommend they go visit their local SBA office for?
So this is something that they would need to find another resource. So a lot of our office's resources really try to explain what are the requirements of the securities laws. We try to kind of help clarify there are a lot of rules, right? And they're very confusing and they're very difficult. And so what we try to do is break down what the rules are, and as well as give some practical suggestions based on like what we've heard from investors, what we've heard from businesses in the market, to kind of help bring that practical experience. But we can't give you advice. So while we are lawyers, we can't give you legal advice on what should be in your pitch deck and how to create a pitch deck. I will say that there are a number of free resources out there. And I think the two that come to mind are kind of the big, the Angel Capital Association, as well as the National Venture Capital Association, so ACA and NVCA, and they have a number of resources out there. Now, I can't speak to if they have something specific to creating a pitch deck, but there are a lot of resources out there through different organizations that can really help break down what is required. I think our resources are meant to kind of take a 10,000-foot view of what is out there and how can we break this down and kind of help answer a question. And every single one of our resources that we've created has come out of an event like this, has come out of these types of questions of how do I do this? When should I think about raising capital? And we try and step back and think about what suggestions can we give from the market and feedback that has been given to us that we can share and kind of provide. But we can't step into someone's, individual circumstances and provide advice. So SBA may be a great place to start. There are other, at some point, while our resources are wonderful, I will say if you are seriously considering a securities offering, you should also consider an attorney. That is someone who can sit down and give you advice for your business and help make sure that you are complying with the rules and really do kind of break down those rules and how they apply to you and what is best for you and your company.
Awesome. Thank you, Jenny. And then just to follow up on that, and I promise I'll turn it over. So do you have any advice for folks who may be seeking pro bono legal help? Is there any resources, maybe an example that you might know about that we could help route folks to?
I mean, that is hard, right? Because capital raising is difficult. And we usually recommend that if you are doing a capital raise and it is a securities offering, that you look for a securities attorney. I know a lot of law schools have different clinics. I know there are a lot of different, even if you go to the American Bar website, the ABA, they have recommendations for attorneys. Those will not be pro bono, but they may be able to kind of help get you to the direction of counsel. But I think the place off the top of my head would be probably a law clinic. So look in the area and figure out kind of what entrepreneurial support organizations are out there that can help you not only think about these difficult questions of how am I actually going to do a pitch deck, but also help start to build your network and make those connections with investors, because you are going to need to be able to kind of bridge those gaps. And a lot of entrepreneurial support organizations exist in different communities, and they know their community base. They know the people that have been there. So that would be the place I would suggest starting.
Great, thank you. And legal clinics are definitely a great resource. I've actually interacted with them myself before. So thanks for that update. And yes, Francine, definitely SBDCs are great. Any SBA resource, MBDA resource as well. And then shameless plug for Small Business Majority. We have a lot of educational resources as well. A lot of the folks based in our state offices tend to work with small business owners directly one-on-one to provide that sort of training to get you guys capital ready as well. But thank you guys for everything, and I'll turn it over to Connor to moderate the rest of the Q&A.
Great. Thank you, Alexis. Hi, everyone. My name is Connor Corsi, the Government Affairs Associate here at Small Business Majority. And thanks again, TJ and Jenny, for this great presentation. We're getting some great feedback in the chat, as well as a few more questions rolling in. And as we move along the next 15 to 20 minutes, I encourage folks to drop any questions in the chat or in the Q&A function, and we'll try to get to those in the next 15 to 20 minutes. But to kick us off, I'll ask one question that came up quite a bit in the pre-submitted questions during registration. Also was just put in the chat as well. So does personal credit impact a business's ability to raise capital, whether that be at the startup phase or the expansion phase?
Yeah, and this is I mean, yes and no, right? So one depends on the type of capital that you're seeking and then what those particular investors are looking for. So kind of the earlier stage of capital, they're probably going to more look at your personal credit. And we see in data that TJ highlighted in the beginning, and this is why we highlight that data, right? The capital raising ecosystem, you don't just think, I'm going to go get a security or I'm going to go get a bank loan, right? It's all fluid. And we have my internet at some point cut out, so I missed part of TJ's presentation, but we have a funding roadmap that really talks about kind of where you should be starting with. And it's based on data. It's based on the fact that most people start with those personal funds, or they start with kind of the business reserves and what the business has created, and then look to an external capital. So starting with that, what I would call non-dilutive funding. So if that means if I'm selling equity in my business, I'm selling part of my company that dilutes my interest in my company. And so a lot of companies are going to start out kind of thinking about those other options and even going to a bank loan. I would imagine that is something, and I am not a bank loan expert, right? I do kind of I deal in the securities, but personal credit is likely to be a consideration. Whereas once you get further along in your business venture, the more history that you have for your business, the more books and records that you can show that you have a successful business, it's going to be less tied to your personal circumstances, right? Angel investors aren't always looking at that information, right? They're looking at what is the business doing, and a venture capital firm is going to definitely be doing the same. Kind of once you get further along in the process, it's less likely to be something that someone is asking about.
Great, thank you, Jenny. And it was great to see the different percentages of internal capital raising versus external in TJ's presentation with the data there. So next questions, I'll kind of bunch two together, and I know that you guys kind of covered it in the Capital Raising Navigator, which is a great resources for small businesses to kind of just see everything laid out in front of them. I can only imagine how helpful that is for a small business owner. But so Catrice from Louisiana asks, what are ways a small business can raise capital if the business hasn't generated any revenue yet? And then a follow-up to that is from Abraham in Georgia. He asks, does your business's revenue have to reach a certain amount in order to raise capital from investors?
So that is an excellent question. And so the securities laws don't separate by, revenue or pre-revenue or revenue-based companies, right? They are available to all companies. And kind of the only restriction tends to be on if someone's like a pooled fund, right? If they are a fund of investors that have put their money together in a pot versus an operating company that is, building a product or, making software or, selling, I don't know, selling pizza down the street, right? So it goes to kind of often what stage of life cycle tends to be, it basically follows on market practice. And TJ, I don't know if you have our annual report able to share. It is kind of a pop quiz, but there is a page in our annual report, and part of the reason we brought it in this year, and I can show my screen as TJ's pulling it up, but there are basically breaking down the life stages of a company. So it shows kind of your early stage companies and the common sources of funding, and then mature and later stage companies and the common sources of funding, and then small public companies. And part of what I like it is it shows kind of, while this doesn't break down by revenue, it breaks down by stage of company. So a lot of companies can be like, okay, I'm small and emerging. I'm just getting off the ground. I'm thinking about either a bank loan or a grant or a friends and family or crowdfunding. It shows kind of what those companies are often seeking in that stage of their life cycle. Whereas kind of your mature and later stage company tend to be more established companies that have that record, that they've probably done a funding round before, likely an angel round, but not necessarily. Some people just go straight into venture capital, and then kind of beyond that. So it kind of shows you not by revenue, but on kind of the stage of the company. And so revenue is one consideration that's taken into account, but it's not like the securities laws say, okay, you're pre-revenue, you don't have access to these. it is basically going to, whether you have revenue, our company's typically getting funded by that type of investor. It's more of a market practice than a securities law.
Great. Thanks for that answer, Jenny. Moving on to the next one, we have Anthony from Massachusetts who asked, what are some of the minimum requirements private investors evaluate when a business is looking to raise capital?
Well, different investors evaluate different things, right? And this is the difficulty. And this is where I would actually go again to point to Angel Capital Resources or National Venture Capital Association or your local entrepreneurial support organization. They can tell you what the types of investors you are seeking are what they most care about, right? Often investors may specialize in a particular industry, or they often specialize in a particular stage of a company. So they fund companies around the same, whether it's product development or revenue basis or income, but there are different stages that different investors consider. And there's no kind of set threshold on all investors need this amount. I often think of, when you think of the relationship between a company and an investor, it's a relationship. It is a very long-term relationship for most companies. So you really do need to be on the same page. So if you and your investors are on the same page, that's what matters, right? That is where you think about what is the company worth and how are you valuing it and what does it mean, when you sell those securities. So I think it's making sure that you and your investor are ultimately on the same page, but there is no set threshold of you need to have a minimum of this or that. The one other thing I can point to is in our annual report, there is data on kind of for pre-seed and seed companies, whether they have a product. And a lot of times it's probably, I've seen less triggered off a product, but more, or less triggered off revenue and more triggered off, is someone developing a product and how far are they in that development of that product.
Gotcha. So definitely some opportunities out there for the R&D stage as well. So Jan from California asked, and I know TJ, you mentioned angel investors and venture capital firms in your presentation, but Jan from California is interested in how your office is working to make capital more accessible for startups who can't necessarily depend on venture capital firms or angel investors for funds.
That is a fantastic question. Thank you, Jan. I mean, these are all fantastic questions. We were so excited to see, we saw a few ahead of time, and I've been thrilled to see them, watching them coming in the chat. This is truly an engaged group, and we are so thankful to be here talking with you. I think it is hard. We know that there are many businesses that need support beyond those with an existing angel or venture capital network, right? And all of our resources that we have created are designed to help kind of level the playing field. And then beyond the resources that TJ has shared and I've shared in the chat, we make policy recommendations every year to both Congress and the Commission, thinking about ways to improve capital formation for small businesses and their investors. And in doing so, we take into account feedback provided in events just like this today, as well as in discussions with women-owned businesses, diverse-owned businesses, and rural businesses across the country, because everyone's capital raising experience is different. And we need to be able to hear where are those challenges, what is happening, and how is the market helping you, or are there challenges that don't need to be there that we need to think about? And some of those policy things that we have highlighted in our annual report are, on the accredited investor definition, looking to expand more opportunities to demonstrate financial sophistication to the alternative, those thresholds. So thinking about kind of who can participate in offerings and how they can participate. And this is something we hear both from companies as investors, wanting to support businesses within their community, within their network, and not being able to do so. We've also heard about crowdfunding that was raised earlier and providing additional flexibilities for companies that are seeking to raise smaller amounts. providing clarity on the role of finders. And finders are people who help make connections between companies and investors. Those are just a few of the policy recommendations we've done, but we recommend other feedback, right? Are there things that we're missing? Are there things that we should be considering? And I shared, and we'll share it again, our email and our telephone number. Please reach out. We have attorneys that help answer these questions and, help have a conversation. So a lot of times we can't answer every single question that comes in, and I encourage you to please email us and we will jump on a call and help answer it. Anything that doesn't get answered today, please reach out and we're happy to help address it.
Great, thank you, Jenny. We have a question in the Q&A function from Seth, and a few others asked this as well. Kind of how SEC, how your office is working with the SBA. I know a lot of small business owners on the call interact with the SBA on sometimes a daily basis, I'm sure. So how are you guys working with the SBA to help small businesses access capital?
That is an excellent question. And this is something that we think about a lot, right? And again, when TJ started with the data, he started with data that is from the Fed, right? So thinking about kind of what is out there across the government and how are we sharing resources? How are we thinking about how businesses are able to access capital or not access capital? We do have a representative from the SBA on our small business committee to our commission. And that representative is super helpful because it helps us further engage and continue to collaborate with the SBA. The SBA also has an advocacy office. And so we have engaged with them and try to help make sure that if they have questions or if they're hearing questions and sharing feedback, either things that we have heard that we think they need to be aware of or otherwise. So it is a relationship and there's collaboration. We can always do better and we always welcome ideas and suggestions on ways to improve this. And be able to kind of really make sure that we are integrating our resources with those of other parts of the government.
Great. And yeah, we know how important interagency collaboration is, especially when it comes to small businesses with, almost every agency having a stake in the small business community. So thanks for that answer. And then, so moving on, we have time for a few more questions. We have one that says, how can my firm collaborate with the SEC to help startups obtain funding?
That is an excellent question. And I think that the best answer is reach out to us. Please email us, please call us. We would love to engage. We'd love to talk. We want our resources to be in the hands of investors and businesses that need them, right? That want to learn about how I'm so sorry. Am I back?
Back.
Okay, I'm sorry. My internet has decided to just die on me multiple times today. I'm so sorry. But we welcome engagement. And can you repeat the question?
Yes. How can my firm collaborate with the SEC?
Collaborate. Yes. Please reach out. Please let's set up a meeting to discuss. We want our resources in the hands of more people. We want to hear your feedback on what you're experiencing and be able to take that into consideration. And the more people we talk to, the more organizations we collaborate with, the better we can do our job.
Great. Yes, and we'll provide email addresses. I know some are floating around the chat from TJ and Jenny, but this will all be included in a follow-up email to you all as well, including the recording and slides. So John from DC asks, how can we best balance reasonable risk with expanded non-traditional investment opportunities for the smallest businesses?
This is a great question and something we get a lot, right? All investments come with risk, right? There is no investment that is risk-free. And I think it goes back to my point about this is a long-term relationship. And an investor really needs to kind of step back and think about how they're diversifying the risk. And this is one of the resources that we've created. TJ, I don't know if you have it in your hand. If you could drop in the chat, we have a building block called Diversify. And it goes to how can I diversify among multiple investments and what does that mean, right? And so we really do think that investors should be kind of stepping back and making sure, assessing the risk across all investments, right? whether it's right for you or not, it may not be, it may be, but I think everyone should step back and kind of think about what their overall portfolio is, what they're doing, and how what risk they're comfortable with, consistent with the securities laws, right? You still need to comply with the law. So certain investors can only participate in certain offerings. So there are some rules that go with it that you should make sure you're complying with. But aside from even what the rules are, I think everyone should step back and think about kind of how they're diversifying, how they're thinking about risk. We also have another building block that talks about different types of securities and kind of what are common startup securities that people are using, and what do those mean? We often get questions on what exactly are these things, and so I think it helps break down, what is convertible debt, what is, versus what is equity or a typical debt loan.
Great. Yes. So last question. Alexis, let me know if we have time for a few more. But so Rodney in the chat, I think a few small business owners on the call will relate to his comments. He says that he's learned that becoming attractive to angel investors and venture capital firms is a slow process, and oftentimes the capital needs of small businesses aren't large enough for those investors, and he can often get his capital through a smaller bank loan or something like that. But he's interested in pursuing other capital sources, like a few of those mentioned today. So if you have any final closing recommendations to small business owners out there that may want to break into these new investor markets, please, would love to hear any.
Yes, no, I mean, it's a great question, and it's a challenge that we see often, right? So I think one point, I've said it before, is looking at kind of what entrepreneur support organizations you have within your community, and thinking about kind of what is your network of investors. Do you have a mentor that can help answer questions, that have done this before, that can kind of help be your sounding board to be able to do this journey? The building block that TJ shared that talks about, are you ready to raise capital? It's overwhelming. There's a lot on there, but I think if you have a mentor and you have someone who can help walk you through, what are these questions? How did they answer them? That kind of helps break down, and it becomes step by step, that it is just, one more step in the process, right? And there's a lot of resources that are out there. If we haven't touched upon the one resource you want, reach out to us. If you need suggestions on building your network and on collaborations, check out several of our other events on our website. We do have this wonderful event called Small Business Forum. All the recordings are posted on our website, and you can hear kind of entrepreneurs that have had wonderful success stories, so share how they got there. Kind of what are the steps that they took? And for me, that it's always helpful to see an example of how someone succeeded and what they did to get there, and how would they do something to improve it next time around. And that's often the feedback that we're being able to hear in our small business forum. So go back, check out those recordings on our website, and reach out to us. If you're looking to answer a question and we don't have a resource on it, tell us. Don't just think that someone else already did. We welcome that, and we welcome ideas. Again, everything that we've created from our office has stemmed from this event. The other thing I would say is bookmark the glossary. We hear from people who have been in this business for decades that they have bookmarked that glossary, and it will help break down what are the capital raising terms that people are using that will help, again, level that playing field. So you can understand, okay, when an investor says this is what they mean. This is what I need to do. And the language of capital raising is almost a foreign language. So we think you need those resources. I have the glossary bookmark on my own computer, and I've been in this area for a very long time, but it is something that's helpful in kind of making sure that we're covering the terms. And if you're not seeing a term that you want or you need, reach out to us. We can add more, and we are continuously reassessing our resources. Thank you again. Before Connor and Alexis close us out, I just want to say we really appreciate this discussion. The chat has been absolutely spectacular. So thank you so much. And please email us, please call us. We're happy to help continue this discussion.
Awesome. Thank you so much, Jenny, for those words. I think that's a great way to end us off. TJ, do you want to say anything else before I close this out?
Yeah, I would just emphasize what Jenny said. I put our email address in there a few times. Any resources that you think there's a gap in or that you could use, let us know. Any specific questions about any of these topics. We really enjoy engaging with you all. We appreciate all the activity in the chat. So reach out to us and we can continue the conversations.
Awesome. Well, thanks, TJ, and thanks, Connor, for moderating. There's so many great questions, and there's definitely more. So please be sure to reach out to smallbusiness@sec.gov to get connected to this amazing team to help answer all of your capital questions or to at least point you in the right direction. Thank you all for joining us, and thank you again to our friends at the SEC. We'll definitely have more of these opportunities coming up, so stay tuned in your email from us for more great events. Thank you guys and have a wonderful rest of your afternoon.
Thanks, everybody.
Bye.
Thank you.